Digital banks processed $4 trillion in payments last year. Your core system handled what? Exactly. While you've been managing legacy infrastructure, neobanks have been capturing your future customers. JP Morgan Chase now spends $12 billion annually on technology. Wells Fargo allocated $14 billion for digital transformation. Bank of America invested in 23,000 technologists. They're not upgrading, they're rebuilding from the ground up, still waiting for regulatory approval. By the end of this video, you'll understand exactly why smart bank CEOs are making billion-dollar technology bets right now, and the 3 strategic moves that separate market leaders from institutions that become footnotes in banking history. You'll know which systems to modernize first, which partnerships accelerate growth, and why waiting for perfect timing guarantees you'll miss the window entirely. I'm with Advanedge Consulting. And if you've been following this series, you know we've covered the foundations of digital transformation. Now we're talking about dominance, not survival. Dominance. The gap between traditional banking and digital-first competitors isn't just widening, it's becoming a chasm. Every month, institutions delay modernization, neobanks gain another percentage point of market share. Every quarter spent debating digital strategy, fintech companies launch solutions that make traditional banking feel archaic. Here's what we're seeing across institutions we work with. Leadership teams are finally understanding that incremental improvement won't cut it anymore. A regional bank we recently helped was losing commercial clients to digital lenders who could approve loans in hours, not weeks. Their loan officers were excellent. Their relationships ran deep. But when a business owner needs working capital immediately, relationships don't override speed. The hard truth. Most financial institutions are fighting yesterday's war. They're optimizing branch networks when customers expect mobile-first experiences. They're debating whether to invest in AI when competitors are already using machine learning to personalize every interaction. They're treating digital transformation like a project when it's actually an entirely new operating model. Smart CEOs have stopped asking whether to modernize their technology stack. They're asking how fast they can do it without breaking existing operations. They've stopped debating whether AI will impact banking. They're determining which AI applications give them competitive advantage first. The institutions dominating today's market made 3 critical decisions. First, they modernized their core banking infrastructure. Second, they integrated AI across customer-facing and back-office operations. Third, they built ecosystems instead of just improving products. Let's start with core banking modernization. The big 3 providers, Fiserv, Jack Henry, and FIS, serve approximately 70% of U.S. banks. These aren't just technology vendors anymore. They're strategic partners in digital transformation. But here's where most institutions get it wrong. They approach core modernization like a system upgrade, instead of recognizing it as the foundation for everything else they want to build. An institution we worked with recently was running operations on infrastructure from the early 2000s. Every new digital service required extensive workarounds. Every integration took months instead of weeks. They weren't just losing efficiency, they were losing the ability to innovate at market speed. When they modernized their core banking platform, suddenly they could launch new products in days, not quarters. But core modernization is just the beginning. Smart CEOs understand that lending operations need equal attention. That's where loan origination systems like Abrigo become game changers. We've seen institutions transform their competitive position by implementing modern LOS platforms that accelerate lending workflows and enable faster, smarter credit decisions. When your competitors are still processing loan applications manually and you're approving qualified borrowers in real time, that's not just efficiency, that's market dominance. Now let's talk about AI integration. Not AI as a buzzword, AI as a business advantage. Institutions we work with are using artificial intelligence for fraud detection, customer service automation, risk assessment, and personalized product recommendations. They're not implementing AI because it's trendy. They're implementing it because it fundamentally changes what's possible. One institution increased loan approval speed by 60% using AI-powered risk assessment. Another reduced customer service costs by 40% while improving satisfaction scores. A third identified fraudulent transactions with 97% accuracy, preventing millions in losses. This isn't future technology. This is operational reality for institutions that move fast. Digital payments represent another massive opportunity. Real-time payments, mobile wallets, cryptocurrency integration, embedded finance. These aren't separate initiatives. They're components of a comprehensive digital ecosystem. Banks that treat them as individual projects miss the bigger picture. Smart CEOs are building platforms that support multiple payment types, multiple customer touchpoints, multiple revenue streams. Blockchain technology is moving from experimental to operational, not just for cryptocurrency, but for identity verification, smart contracts, supply chain finance, and cross-border payments. Institutions that understand blockchain's practical applications are building competitive moats their competitors can't easily replicate. So what does implementation actually look like? At Advanedge, we help institutions navigate this transformation systematically. First, comprehensive technology assessment. What's actually working in your current infrastructure? What's holding you back? What should you modernize immediately versus phase in over time? Second, strategic vendor partnerships. The right relationships with core banking providers accelerate everything else. Whether you're working with Fiserv, Jack Henry, or FIS for core banking, or implementing loan origination systems like Abrigo for lending efficiency, choosing partners who understand your long-term vision makes the difference between smooth transformation and expensive delays. Third, regulatory navigation. Every innovation must comply with banking regulations. Smart institutions don't let compliance slow innovation. They build compliance into their innovation process. We help clients work with regulatory frameworks, not against them. Fourth, phased integration strategies. You can't transform everything simultaneously without disrupting operations. But you can't afford to move slowly either. The key is identifying which systems and processes deliver immediate competitive advantage while building toward comprehensive modernization. Here's what separates market leaders from followers. Leaders don't wait for perfect conditions. They create conditions that favor their success. They don't implement technology for its own sake. They implement technology that serves specific strategic objectives. They don't try to compete on every front. They choose battlegrounds where their advantages compound over time. The future belongs to financial institutions that understand this moment in banking history, not the distant future, the next 18 months. Interest rate environments change. Economic conditions fluctuate, but technological transformation in financial services is permanent and accelerating. Institutions that modernize now, while their competitors debate strategy, will capture market share that becomes very difficult to reclaim. The businesses that survive the next 3 years all did one thing. Next video reveals it.